on how we could do it, on how we could add the sounds, on how we could add the subtitles. So, guys, can you hear me? Are you hearing me? Are you hearing my voice? Am I direct and clear to you all? Before I start and get on with the lesson, am I clear? Can someone tell me? Can someone say something? You please say something. Are you hearing me? Loud and clear. Okay. Okay. So today, the topic of today will be doing levels. So for levels is a quite complex section. So we're going to have two sessions today. Those who will not be able to join the second one, everything will be recorded for you guys. So you just have to rewatch the videos. The links will be posted. Everything will be there for you. Okay, thank you. Thank you. Let me close the chat now. So today we'll be talking about levels, level counting. So on level counting, it's a quite complex section in the BTM strategy, and it's a very important one, and it should be taken note of very well. So getting into it, level counting. Sorry, I had to make this very big and clear for you guys so that you can read and take note of it. Sorry for the size, but I just wanted it to be clear to you. As you can see, we have 4 ways of counting levels in BTMM. With BTMM, with this strategy, we have 4 ways, and they are numbered. The first one being 2.5 days to 5 days rise or drop. The second one, ADR levels. The third one, using Asian box stacking, and the fourth one being EMA crosses. Those are the four methods of counting levels that we'll be talking about in this session today. So, the first one being 2.5 to 5 days of rise or drop. Levels are strictly done on H1 time frame, guys. It should be strictly on H1 time frame. Why? This is because it is on the H1 time frame that we are able to tell the directional bias, and levels are mainly to show us directional bias, not to show us trade setups or trade entry. That's why it is not as important as the pattern and timing and the pushes, because those three are the ones that show us the the that show us the trades, and that show us the entries, where exactly we should enter. The levels are just for directional bias, and thereby them being done on the H1 time frame. So as you can see, we have the market maker cycle right here. We have the market maker. We have the market maker cycle. Yeah. So you can see week beginning Monday. From Asian session, stop and low to the bottom, giving us a W confirmed reversal. Second leg entries are done here. Then there is the first day of rise, the second day of rise right there, and the third day of rise. And these being small intraday rises, small intraday levels, level 1, level 2, level 3, intraday. Then reset on intraday, then level 1, level 2. But then overall, these are 3 days. Day 1 rise, day 2 rise, day 3 rise. I hope you get this. Day 1, the day 1 rise, then on the second day there is rise again, then there's day 3 rise. This simply means this is level 1 right here. Level 1, level 1, level 2, level 3. This is how we count using this is how we count levels using the 2.5 to 5 days of rise and drop. So on the levels, on this particular way of counting levels, using days to count levels, sometimes why the name of this method is called 2.5 to 5 days of counting levels. This is simply because sometimes the market is not constant. The market is not a textbook. It varies. It is dynamic. That's the right term for the description that we could give to it. It is dynamic. It has no exact forms. So because of that, sometimes levels might be completed in from 2.5, and sometimes 2.5, like 2.5 days levels could have been completed then, or sometimes the levels can go up to 5 days, you see. So that's why we're saying the markets are dynamic and levels are not like perfect and they're not exact. I hope you get what I mean. So sometimes levels might, for different pairs in different weeks, the levels might be completed up to 3 days, sometimes 4, sometimes 5, or sometimes even more. So as we can see, um, there are intraday levels inside a major level. Intraday small level counting inside a big level. I hope you get that. Moving on to the next slide. So for this counting levels using days of drop or rise, as you can see right here on this slide here, the level started being counted at level 3. We can see by a W here, an M, sorry. You can see by an M right here being formed here. And this is day 1, indicated in the box, in the orange box here. This is level 3. Then this is level 1, level 3 of the previous levels from the previous week. Then this is day 1. So this is like Monday, and it's our level 1. Went into Tuesday, giving us our level 2, right here. Then we went into Thursday, giving us level 3, as you can see right here. Then the market closed on Friday, went into the following week. So that's simply how we count levels using days of rise and days of drop. Moving on. Like I had said, sometimes the levels exceed 3 days and get to 5 days or even more sometimes. As you can see in this one, we had a peak from the previous week, then starting to count levels from Monday. There was from day 1. This is day 1, giving us level 1 right here. The market continued to drop in day 2, giving us level 2 right here. So for level 2, we can see that on level 2, that's when we experienced 3 consecutive days being in one certain level. Day 2, day 3, and day 4 were all under level 2, meaning this is seen by consolidation. There was consolidation on level 2, thereby accumulating 3 days for the week. So this usually is what happens when level counting exceeds 3 days. Then the market From level 2, it went on to drop into level 3, being the day 5. Yeah. And the last day of the week, Friday. That's how we count levels using days. Sometimes, like I said, I repeat, the market is dynamic. These levels are not perfect. They are not perfect. That's why I repeat, I'm repeating again. That's why the most important things in this strategy to know and to be able to recognize more than the levels are the pattern, timing, and the pushes. Those three things are the most important things that one should be able to recognize more than these levels. For you can see that on this particular pair, for this particular 2 weeks, the market the market makers moved price, completed the levels for a particular pair in 2 weeks, guys. In 2 weeks, like it took 9 days to complete 3 levels. So you can imagine how confusing it can be at times when you're used to counting 3 levels for 3 days, you see. So that's also the reason why there is no we do not use one particular way of counting levels. There are other 3 ways that we use to count levels with. That's why we don't just use one particular way of counting levels. So moving on, as you can see, consolidation usually is the reason for many days being trapped into as one level, forming one level. Consolidation usually, also known as accumulation, is usually the reason why. And usually when you see consolidation and accumulation on H1 time frame, just know that the levels are not done yet, and using the other rules that we'll be talking about, you can confirm that the levels still need to be counted and the price is going to continue going either up or down. Either it's going to continue to rise or continue to drop. Levels using days of rise and days of lows. This one is a perfect example now. As you can see here, level 3, day 1, forming us level 1, then going into day 2, that's Tuesday, level 2, then day 3 giving us level 3, and that's Wednesday. Then thereby expecting the market to reverse. Perfect. So sometimes the levels may be perfect and sometimes it may also not be perfect. As you can see, over 5 days, 3 levels of rise over 5 days. Started off with a peak here, went off into day 1, giving us level 1, day 2, and day 3 in consolidation. Both of the on both days, giving us level 2. Then finishing off the week on Friday, Thursday and Friday being also level 3. So, like I said, let me repeat again. Sometimes it may take up to more than 5 days, and usually due to price consolidation and resets to be talked about in a particular session, not this one, on the same level. So price action and resets on the same level. So it is not encouraged to just count levels using one method of counting levels. So that's why we have various ways of counting levels. The second one being a ADR level counting. like counting levels using the ADR. What is the ADR? Someone may ask me that. What is the ADR? Let me show you the ADR. The ADR is the average daily range. Average. So what happens is for every particular pair, for each and every pair, it has its own average daily pips that it has to accomplish for a day, for the day. So it is by that value that we use to count the levels. So it's sort of like a second confirmation. You can add it on to the first one that we talked about, like the counting of levels using day one and day two, using days of rise and days of drop. So you can add on this counting of levels using ADR. So how do we count levels using the ADR? So simply, let me show you here. Let me show you. So if you guys, if you have this same if you have this same template as I have, you see here, I don't know how I can zoom for you guys to see. At this corner here, where the pair's name is written and the time frames are written here, where it's written ADR here. This ADR 124 pips. This is the ADR for this particular pair. So each pair has its own value for ADR. So what will we be doing when we say we'll be counting levels using the ADR? Let me show you. So it simply means that we're going to use this tool here. Oh, I know you guys, everyone who uses MT4 is familiar with this tool. This tool here that we use to count pips and to locate price and check the time and dates. That's the purpose of this tool here. So it is by this tool that you use to calculate, to be counting the average daily range. So what we do when we what how do we do it? So the first thing is, once for a particular week, it's count per week, it's separated weekly. So for this week here, this particular week, let me zoom into it. For this week here, I don't know which week is it, which week was it. So you look for the lowest week, for the lowest point week. So we can see here, when you that is if we are counting from the W, from level 3, from the peak formation low. That's only when we look for the lowest tip of the peak for that week, for that certain week. So for this week, it's this week right here. So now we want to count ADR. We noticed by the value that's indicated at the corner there that for this pair GU, its ADR is 124. So this simply means that level 1 is going to be 124, like 124 points. Those are points, 124 points. So simple, guys. So we're just going to stretch out this 124 pips, I mean, sorry. We're just going to stretch out this 2 here. We're just going to stretch it out just like this. up to the point where it's 120, 124. No, this was not the peak formation low. Yeah, let's use for this one. As you can see, as you can all clearly see that this was the peak formation low. Yeah, this was a peak formation low here. So with the, as we said, we look for the lowest tip of the wick. We notice it is from here. So we are going to stretch our 2 here up to 124 pips. 124 pips, we're going, still going. And that's here. So this was the whole level right here. This was level, this was the whole level. This was the whole level right here. So indicate it like this. This is just a rough idea, guys. You need to do it perfectly and patiently. So what we're going to do now is we're going to duplicate this now. So let me just confirm if this is 124 pips. Or it's even more. Okay. You can adjust it from using this rectangle here. Then we're going to duplicate it into 3 for 3 levels. So we're going to place it. We're going to place each one for each particular rise. Level 1 is placed. Now for level 2, we're going to look for stop band. So this particular rectangle is placed where there is a dip, sort of like a stop band. Level 1 has been placed. Level 2 has been placed. Now we are looking for a dip where we could place level 3 right here. Level 3. And you can see how perfect this is. Here. Almost here. It almost hit this, the peak. It almost hit the peak formation high. So perfect. So perfect. So that's how we count levels using the ADR. We just check the ADR value for that certain pair, then we just measure out rectangle boxes. We just shape them. You just have to get them horizontal, vertical. I mean, sorry. Yes, you have to get them vertical. Then you stretch out you use that instrument, the tool that I used to calculate the value of the vertical rectangles. Then you move around, you duplicate one rectangle, then you just place each one on stop hands, like when price stop hand. When price counts for a stop hand, that's when we count levels. That's where you count levels from. So that's what happened here. But this one, so this is just the same idea. We can either use those rectangles or we can use these lines here, these trend lines. Just the same thing. We just measure out one line, one trend line with the actual value of the ADR for that pair. Then you duplicate the trend line 3 times. Then you just place each one on the stop ones. As you can see here, you need to wait for a dip, then you place it. You see this one level, then a dip, then you place your rectangle or trend line, whatever that you're going to choose to use, then dip, then you place it. So just the same thing. So now level 3, level 1, we use ADR times 1, ADR times 2, ADR times 3. Same thing. Here we're just using the trend lines to measure out 1 with the ADR value for that pair, duplicate it 3 times, then you just place it on each top hand, just like this. Simple as it is, guys. Simple. So now you then combine it with the first one that we talked about. So up to the fourth one that you up to the fourth one, the fourth method of counting levels. Uh, that's how you're going to use. That's the tools and methods that you're going to use to calculate the combining all four of them. That's how you're going to count the levels as a whole. So for this video, it's going to end soon for this live video. So I'm going to open the chat box for you to ask questions if you had them, and I'll answer them in the next video that we're going to do. I think we're just going to have a 5-minute break, then we're going to get back. So for those who are interested in joining back again, you're all free to join. For those who are going to take the break and not want to come back, it's still fine. You can watch we were going to I'll be recording all of the sessions, so and they'll be posted on the YouTube channel, so it's still fine. You can still go and you watch them later. They'll be waiting for you. So the chat box is open. It's open. You can ask, you can comment, you can say what indicator is that for the ADR counter. Well, it just comes, it's not a particular indicator. It comes with the whole package for the template. It's fixed on the template. So once you have the template, you have the ADR counter. Or the template, I posted them. They are in the channel. They are all in the channel. Can you go over how to use the trend line to measure ADR? Okay, I'll rush through that in the next video. I'll rush through that, but simply the same thing with the rectangle idea, but then I'll just do it for learning sake. More questions. Ask. What are those orange boxes? Orange boxes are levels. I used to count levels. So for each level, once you notice a level, you then indicate the level by that orange box. That's the purpose of those orange boxes. It's as simple as it is. Thanks for the help. I'm sticking here with you. Yeah, thank you. Thank you for wanting to stick with me here. Thank you. Yes, this actually works better with MT4. After I discovered BTMM, I never opened TradingView ever again. Maybe to check for some instruments or for the dollar index maybe, but then I never opened it again. This is perfect and it's best with MT4. It's just the way it is. So if levels are not clearly visible on the chart, but pair 3 times idea, would you imply yes, not as we said there are 4 methods that we use to count levels, right? So once we notice that our pay for that pay, it has reached 3 times ADR, we are not going to only consider ADR only. We are going to consider the day counting. We are going to consider the Asian ranges, Asian boxes taking. We're going to consider the EMAs. So using those four, I'm sure you're going to come up with one conclusion. If price would have reached level 3 or would have not reached level 3. So that's why we don't just base counting levels on one particular method of counting levels. That's why we have diverse ways of counting levels. So it's about end the TDI settings. It all comes as one package, guys. They're all in the channels, in my channels. They're all there. You can just click the pinned message. That will take you to the very first messages, to the very first posts. That's where the indicators are. Are you showing us the other method? Yes, yes, I'm going to show you the other two remaining methods in the next video. That's why I'm just waiting for this one to end and take a 5-minute break, then continue. Then continue with the remaining two methods of counting levels. More questions, guys. More questions. If I had not seen your question, please just retype it. If you are not answered, just retype it so that I can see it and answer you. So once this video ends, let's just take a 5-minute break. Then exactly 5 minutes we'll be back. At exactly 5 minutes we'll be back with the second video. If you are left out, no worries. These videos are all recorded and they will be all posted for you to join in. Session tomorrow. Tomorrow is Saturday. It's time for traders to rest. We have been trading each and every day of the week, so we do deserve rest. But then I will look into it.